Hi, I'm Charlene Laney, co-founder of Newmaker Financial and certified financial planner. Today we will be talking about the Health Savings Account, or HSA as it is better known. Now, HSAs carry some tremendous benefits and they may be an option for you. Now, how would you know if you are eligible? Well, an HSA can be opened by anybody who has a high deductible health plan through their employer. How do you know if you have a high deductible health plan? Well, this is something that I recommend you try to square away with your HR department. But assuming that that is the case, you do get some tremendous benefits, like I said, from an HSA. They are what we call in the industry triple tax free. So those three taxes that you actually get to avoid by proper use of an HSA are that first tax is income tax. You get an above the line tax deduction for any contributions that you put from your paycheck into an HSA. Now, of course, your employer can add some additional contributions too as part of your benefits package, but you'll want to check and see if that is an option or something that they do offer. Second tax that you avoid is that of capital gains tax. These are investment accounts after all. You get to choose certain investments to put these funds into to allow them to grow more than a typical interest payment. So when you go to sell the mutual fund or stock or whatever it may be, it tends to just be mutual funds and HSAs, but once you sell it, if there are gains on that investment, you do not need to pay capital gains tax. And finally, the third tax that you avoid is that of withdrawals. So from tax deferred accounts like IRAs or 401ks, other tax advantaged vehicles that we are used to seeing allow you to get that tax benefit up front, but you generally have to pay taxes on the back end when you take money out, and that is not the case here so long as you use the funds for qualified medical expenses. Now, what is actually going to count as a qualified medical expense? Thankfully, the answer is fairly broad. Any medical related expense incurred by you, by your spouse, or any of the dependents claimed on your tax return for that year count as qualified medical expenses. Now, these can be as cut and dry, as expected as something like a doctor's visit or medications that you purchase that are on your prescription. But it also includes some things that are a little bit less obvious, like over-the-counter medications such as Advil. Now, for more details on this and what is included, I would recommend checking out the IRS publication 969. There were some updates and additional inclusions there in 2022, so do recommend checking that out. Now, overall, with the HSA, we do generally recommend that if you have access to it, that you should at least consider making contributions to this type of account. And assuming that it's right for you, contribute the maximum amount that you can for it. It's no secret in this country how expensive medical expenses can be, especially later in life, even cripplingly so. Not to be punny, but it is unfortunately a harsh reality that we are living in here. So we want to encourage you to plan as much as possible to take advantage of this account, and assuming that it's available to you, and save on some taxes while you're at it if it's something you'll need to pay for anyway. So yes, HSAs, hopefully this has been helpful for you. I just wanted to provide a little bit of information on them. Now, I'm not going to say that they are right for everybody, so certainly consult a professional to look at your overall financial picture and see if this fits in well with your financial plan. Otherwise, if you have questions, direct them to us individually, info@newmakerfinancial.com, and we will see you next week. Thanks, everybody.